Hey, good morning, guys. Welcome to Market Monthlies. We're going to recap everything that has happened in the last month, really 4 weeks since the last Market Monthly I did. And we're going to give you guys some updates on what's happening with inflation, the economy, and how has impacted the housing market and what we're expected to see next year. So before we get started, get right into our dad joke. So what do you need to make a really good movie about broken bones? What do you need to make a really good movie about broken bones? An awesome cast. An awesome cast. Pew-pew. All right, getting right into it. First, let's talk about housing. So housing has been severely impacted by the rising interest rates of this year. Now, just to give you guys an idea, in December of 2021, we saw rates at around 3.5%, 3%. Since then, we're sitting at the peak. We were sitting like high eight. We're hitting like real low eights, high sevens, depending on which loan program you were going after. And it peaked out around there. And so it kind of basically more than doubled than what we saw by the end of last year. Now, because of that, it had priced out a lot of buyers and as well as caused a lot of inventory to rise because not a lot of buyers in the market to take houses off the market. Right? Makes sense, right? So what has happened to the housing market? So let's kind of look at what numbers say first. So this is pulled from a subscription I have from MBS Highway, and this is what it's looked like in just the last year. And it's kind of interesting to see because, everyone has seen a lot of home price reductions. A lot of people have seen, some of my clients have what's called HomeBot. So they saw some of the home prices drop. But what's really interesting to see here, even at the end of the year, we're still seeing above 10% appreciation. I do a lot of clients in Washington State. And if you just look at Washington State here, it's at 10.6. So overall, not bad. Over the last 12 months, you still saw appreciation, not as high. So the best way I can describe what appreciation has done is that for the last 2 to 3 years before this year, we were going at 150 miles per hour with appreciation. Now we're going 75. Again, 10% is really high, still really high compared to the actual average if we took out the last 2 years alone. Home prices on average have been appreciating 3 to 5% per year on average, even with the housing market, the housing meltdown in 2008. We still are seeing double-digit appreciation, even with the rising of interest rates and home prices dropping because of that. So overall, housing is still relatively strong. Now, one thing you need to note is the last quarter that we've been seeing is that we finally see a number that's kind of flat. For those who are in Washington State, really on the West Coast, we've been seeing a negative number. Oh, well, the other thing to think about is that these areas on the West Coast typically have really, really high appreciation compared to the rest of the United States. So they're going to have the biggest swings in regards to home prices going up and home prices going down as well. Now, there's still about half of the other country is still seeing pretty good amount of appreciation, 1 to 2%. So still overall not bad for a quarterly average when you see a yearly average of about 10% or more. So overall, housing prices are strong. You will still have value. You just may not have as much value as hoped. If those who have sold at the beginning of this year saw the impacts of that, with so little inventory and so many buyers, and that's what the main thing that's happened throughout this year is that we had such a huge swing from low supply, high demand to high supply, low demand. Now, one thing to note is that we're still in a very low shortage of inventory. We're still below 6 months, which is a balanced market, which means that all the homes that are on the market, that's not a balanced market. We're still seeing low inventory. So that's something to consider as we go into later in the season when interest rates drop and home buyers come back and take more homes off the market. We may see what we saw again earlier this year. So overall, housing market is still relatively strong. Now, next thing we want to talk about is inflation. So inflation, just to give you guys an idea, there's a couple ways to measure inflation. There's like 3 major ways: CPI, core, and PCE. Now, each of those reports come out once a month for the previous month. Now, the main one that we're looking at is core inflation, which is what the Fed monitors. This is what the Fed really follows. And this is what most of the economy follows. Now, over the last 12 months, we've been seeing inflation being really high. There's one inflation reading that says about 8% or 7.7%. The core one is saying about 6.3. Now, what we're expected, so November 10th was a big day for us to kind of figure out was the impacts of the Fed hikes were going to bring down inflation. And in fact, it did. So that's what this October reading was for. November 10th showed the October readings, seeing that inflation actually went down, which was a good thing. This was an expected reading, especially with how inflation's calculated, because it's a year-over-year number. So what we're hoping is that December 10th, this Friday, and then around the 10th and 11th, around the 10th of January, we're going to see those same reports come out, and we expect them to be lower and lower and lower. And that's going to be really good and going to be able to push us to bring inflation down. Now, what is now effectively we're going into is a recession. A lot of you guys have heard reports of layoffs, hundreds of layoffs. Lending is no different. Corporate companies have layoffs. My sister have told me that her company has done a lot of layoffs. So we're officially, I would say there's a really good sign of us going into recession next year. It's if we're not in it already. So it's already down its way. Now we already have seen like 5 different types of recession indicators that have popped up. The big main one that is the big rule of thumb for Wall Street is 2 negative quarters of GDP, which means it's just a slowdown of production and sales of production of that produce and manufacturing as well. Quarter 1 and quarter 2 were both negative. So we haven't seen in history where we saw 2 negative quarters of GDP and not go into a recession. Every time there was 2 quarters of negative GDP, we go straight into recession. So it's something to consider with your finances as we're going into a recessionary period next year. Now, what does that do? And in regards to what mortgage rates will do, what will stocks do? For the most part, as inflation comes down, people are going to make less money from the stocks because inflation is going down. They're not going to be making as much money. So at that point, they're going to be shifting their funds from stocks to buying treasury bonds and mortgage-backed securities. Why that's important is that as they buy more of those things, mortgage rates will improve, which is exciting. So, we're still in the 7s, which is, a lot better than what we were a month ago. But now we're seeing actual improvement of inflation where mortgage rates will start to come down. So one thing I want to mark is, again, this Friday is going to be a huge thing. CPI is going to come out, core is going to come out, things like that. Next month is going to be the same thing. Once we have 3 trends of those systematically going down, we're in a good spot. So something to consider as you're messing with your finances or you're in the process of buying a house, right? I still tell a lot of people is that between having low inventory still, even though there's not enough buyers, as mortgage rates go down next year, the buyers will come back. When the buyers come back, it brings back competition. Competition will cause home prices to go back up. So if you are able and can buy a house right now, I would highly recommend it and just be able to refinance when you met that time requirement, which is about 7 mortgage payments. So it's relatively soon when you can do that. So about after 8 to 9 months after you bought the house, you can refinance and get a better rate. So, and at that time, guess what? All the home buyers are coming back, driving up competition. You also get the impacts of the appreciation that they're going to be causing. So it's something to consider when you're considering what to do with if you should buy a house or wait to buy a house. Now, sometimes it makes sense. Sometimes with the whole mortgage rates and things like that, it does make sense to wait a little bit. However, I feel like there's going to be this also very nice magic window that's going to be coming up. When I say about this magic window is that it's going to be a bit, so as mortgage rates come down, there's going to be some delay of where home prices are not going to react yet. Right. So as mortgage rates come down, ideally, buyers will come back, home prices will go up, but there's going to be a bit of a delay. So I believe this magic window is going to be between January and February, maybe even March, where you can get in. Rates will be a lot better than what they were in the last 3 to 4 months. And your the price that you get on the home is still relatively pretty good. So, and you can still get all the concessions. It's still relatively in a buyer's market. So you get the impacts of that. So something to consider as you're considering buying a house or helping clients buy a house into the next year. So that's what my forecast is going to be. That if we systematically see November, December, and January see progressive improvement on inflation, we'll see progressive improvement on mortgage rates. As mortgage rates come down, buyers will come back. Buyers coming back will cause home prices to go back up. And again, we're still in a low inventory situation despite how little buyers there are. So something to consider. And feel free to share this information. I have a bunch of information on my YouTube channel, Nuke Notes. So if you guys don't have information about that, I'll post a link, and you guys can check out all my other market Mondays, which I do once a week. This one's just a market monthly. So I'll be posting this about once a month. Anyway, that's all I got for you guys. Have a great week. Happy holidays, and I'll talk to you guys soon.